I called it the Brooklyn Bridge problem. Uh, what happens is that anybody can sell the Brooklyn Bridge on Ethereum. It's very easy.
Hi everybody, this is Value Tokenized with CryptoTwins. Today we're interviewing Amy Ben-David, the real pioneer of digital securities industry, who has such projects in his background as Spice VC Tokenized Fund, securitized platform, and he has over 7 digital ecosystem companies in his portfolio as an early stage investor. Long the banker, says Amy, and in this interview we will be discussing institutional adoption. Hi, Amy. Thank you so much for joining us today at Value Tokenized. It's a pleasure. I would like to ask you about what was before blockchain, before tokenization, because you have a long career that started like way before maybe even Bitcoin was invented. And what did you do that led you to this very exciting space?
So I was always in the high tech industry, mostly as an entrepreneur and also as an executive, and I was also an investor part of the time. And I did various things, a lot of things around mobile applications, some projects that involved AI before AI was very popular. Um, and one of the companies that I co-founded was very active in the UK market. So that's why I moved to the UK about 15 years ago, and my base has been here since then in London. And I really didn't have much connection to Bitcoin at all. The only connection I had to Bitcoin was one of the companies I founded was called Everything Me. We were doing a search engine, a decentralized search engine based on HTML4. Um, and some of the developers, when I would walk in and talk to them, they were talking about this thing called Bitcoin, and I didn't know what it was. And they kept on arguing about it, and some said it was useless, and some said it's the future. So I decided to buy a few, and that's how I got into the Bitcoin space. Became $1,000, and I was excited, and then it went down to whatever 500 and less, and I forgot all about it. So I only came back to blockchain in general in 2017 when we started Spice.
And now you're the real pioneer of blockchain space, especially when it comes to tokenization of securities of real world assets, having co-founded Spice VC and Securitize as well. And what are you mostly focused on right now? What is your next big project?
The next project that I'm working on is called Ownera, and Ownera came out of my experience with the space with security tokens, looking at security tokens. Uh, I haven't been involved in Securitas for a while now, but I have been investing in a lot of security token companies through Spice, and we invested in some, but I've analyzed and looked at most of the companies, I would say, in the market at this point or another. And the what I realized more than anything else was that everybody were building on top of Ethereum, and everybody were continuing I would say, the concept of going to the crowd, because STOs grew out of ICOs. It was a natural progression. Um, but I came to realize more and more that security tokens actually should be called digital securities, and because it's a much bigger thing than just tokens. It's about digitizing something that is completely analog ownership, and that's what Ownera is about. It's about building a blockchain for ownership that is not based on the relatively limited world of crypto, but is actually suitable for the wider audience and specifically for institutional investors. I call this institutional grade, because from my talks with the market, my discussions with market leaders and so on, I realized that the institutional space and institutional investors is where the big capital is, where the trillions of dollars are actually managed. And if we can't reach those people, those investors, we will not grow to the full potential of security tokens. So I felt there's a whole industry here building applications, and the whole industry is building on top of a network which is not suitable for institutional investors, and institutional investors where the capital is. So I felt very passionately that we need to find a solution, a blockchain network that is suitable for this market, that investment bank can use, that big exchanges can use, and then pension fund managers can feel comfortable investing in.
But don't you think that there is some controversy between, original concept of decentralization and blockchain and institutions? Because, one of the favorite mottos of the industry is to cut out the middleman, like short the banks.
You
And,
say long the
yeah,
bankers instead.
and you said long the banks. So is there a controversy and how it can be solved in your opinion?
Short the banks, I think most of the kind of concept of short the banks is about people's interactions with banks on a day-to-day basis. And my interaction with banks is on a day-to-day basis is not amazing, to say the least. And I'm not happy with banks. So, but I am talking with long the banks about specifically about institutional, facing parts of the banks, like the investment banks and things like that. And I think that there's a whole world here of capital that will just not go in on platforms built by cypherpunks and managed by people that their whole philosophy is to cut them out. It's exactly like you said. On the one hand, the crypto economy says cut all the banks out, we don't need them, and on the other hand, they're expecting the bankers to use their platforms to reach those big capital pools, and it's not going to happen because these are completely two different ideologies, two different ways of looking at life. When you're looking at crypto, you're looking at running. It reminds me of the old Facebook model: run fast and break things. So Facebook is not even doing it anymore, but in crypto, it's run very, very fast. Sometimes spend a lot of money, do nothing in return, and sometimes it is. Some of the projects are serious, but it's definitely about running fast, about uh, uh, disregard from regulation or putting regulation to the end. While when you speak to investment banks, they have something called fiduciary duty. They have to make sure that everything is 100% perfect in terms of legality and so on, because they know that if they fuck up when they sell something to their institutional investors, they have to cover it. It's their fault. So it's when I'm talking to them, it's a completely different way of looking at things. You sit for hours in workshop and go over every single details of how things are going to be done, and how in the initial stages, in the later stages, how exchanges are going to be run. It's much more, I would say, professional financially than I'm seeing in crypto at all. And these two worlds are not on the same. They're in parallel universes. And whoever thinks that banks are not going into banks and institutional in general are not going into digital security doesn't know what he's talking about. Every single bank is having projects and going into it. But whoever thinks that they're going to do it over Ethereum is just as wrong. It's not going to happen.
But in your opinion, what exactly makes Ethereum not suitable for work with institutions? Some specific features?
I would say it's a combination of two things. It's a combination of, on the one side, the features, the technology. The technology itself is built around, I would say, anonymous network where everybody can do what they want. And as you said, there's no intermediary. The problem with that, and we've seen it with ICOs, is that anybody can issue whatever they want, and everybody can say whatever they want about what they issued. And the network itself doesn't care about what happens outside the network. I called it the Brooklyn Bridge problem. What happens is that anybody can sell the Brooklyn Bridge on Ethereum. It's very easy, or any of these crypto networks. You just issue token, you call them Ethereum, and if you have enough marketing and you can convince enough stupid people that you actually own the Brooklyn Bridge and you sell them the token, then when the token move on Ethereum, the miners are very happy to say that the buyer owns Brooklyn Bridge and you don't own the Brooklyn Bridge, because the tokens have moved hands. So there's very little connection to the real world. The problem with that is theoretically solvable. You could solve it. You could place a proof of ownership on Ethereum as well. Um, but what it means is you have a network where some issuers are genuine and some issuers are cheaters. You can't have a market where a good percent of the market is not genuine. You can't have a network where 80% of the stuff that's being issued is just garbage and 20% is amazing, and you expect people to go and invest in the 20%. I think this is a very big problem, and whoever thinks that it can be solved by just issuing on platforms that are great, it can be solved. There is a market for that. I'm not saying that there's no market for digital securities off institutional market. Definitely there's a market. I mean, I have investments there, and I have companies that are doing really, really well, but it's very limited in terms of size. It's billion versus trillions.
How does the solution that you're creating at Ownera look like from the technical perspective? What makes it suitable for institutions?
So there are three things that make it suitable for institutions. First of all, we've built it on a platform called Hyperledger Fabric. Hyperledger Fabric is one of a very very small numbers of platforms that are advanced enough. Institutions are already building on it. Uh, Today they're building private network, and I'm not a big fan of private network, but it is capable of being institutional grade, and it's supported by companies like IBM and so on. You can get a managed service of Hyperledger Fabric on top of Amazon, on top of IBM, Google, Microsoft. So it's very, very institutional friendly. That's the first thing. The second thing that we've done is we turn it into a network, because I don't believe in private networks. As I said, I see the market of institutional today. I'm seeing dozens of POCs, and none of them can talk to the other, and none of them will be able to talk to the other. It's like the old days of intranets, where everybody would build their own intranets. And the real value of digital securities is in a market, in a network, in liquidity, in distribution, in access, in availability. I still believe in all these things. It's not that I'm not a believer in the long-term vision of crypto. I definitely am, the vision of democracy and so on. But in order to get there, it has to be a network, but it has to be institutional as well. So the second thing that happens on Ownera is that all the nodes on Ownera are only regulated financial institutions. So all the nodes on Ownera will be basically regulated: exchanges, investment banks, asset managers, broker dealers, people that are regulated to deal with finance and money. And all the assets on Ownera every asset on Ownera, in order to be uploaded to Ownera, will have to work with one node. We call them underwriting nodes. Mm-hmm. And the nodes will just upload them to the platform. And what will happen is that any asset can come in as long as they work with a node. And the result for the users is that all the assets on the platform, 100% of the assets on the platform, have gone through an underwriter, which is a regulated entity. So if anything goes wrong, first of all, you have an underwriter. At least somebody third party looked at the issuance and verified that it's not a Brooklyn Bridge. Okay, that is a serious offering. So that's the second thing that makes it unique, that all the nodes are regulated financial institution, but it's still a network. And it's actually an open network. So every entity, every financial entity which is a regulated financial entity can join. So it's not going to be a syndicate that's just limited to a small number of it's open for the whole world to come in. The third thing that we made interesting there is something that I called KYA. Mm-hmm. KYA is Know Your Asset. It's the equivalent of KYC. Today, every user that wants to trade security token has to prove who they are in the real world. And that's called KYC. And I thought that one of the ways to solve the Brooklyn Bridge problem is to have a situation where every asset also has to say who they are, and it's approved by an underwriting node, the third party. Same way you can do your own KYC. You can say, "Hi, I'm not laundering any money." You need somebody to look at you and verify. Same thing happens for assets. So KYA is a set of documents that prove beyond a doubt what is the asset, and especially what are the rights of the token holders in the assets. It could be documents, it could be data, it is signed, it is legally binding, and then it is packaged into KYA, and it's stored on the blockchain, so it's immutable. Nobody can say to you that the building that you bought yesterday and you thought you're getting 10% rent, that you're now getting only 5% because somebody changed it overnight. It's on the blockchain. It can be updated, but it's definitely immutable. And that's the main story about KYA. KYA creates a situation where if somebody goes to Ownera and looks at 10 assets, they can see exactly what the asset is. They can see exactly what they're going to get, what the rights are in the KYA. They have legal proof that they own these rights through the KYA, and they have an underwriter, a third party that looked at it. So this is something that is 100% safe, as opposed to a platform where 80% or more are just garbage issuances. So we think that this is those three things together: institutional, network, and information verified through underwriters is what's going to make this market much more I would say mature and serious.
How does the process go? So there are several types of parties involved, and how does the client process look like? Who is your target audience in the first place? Are these issuing companies or is institutions who are looking to invest in tokenized digital securities?
What I'm trying to help accelerate here is a market, right? And if you look at the market now and the market players, you'll see the following. You will see that on the one hand, you need assets, and on the one hand, you need investors, buyers, and you need something in between to connect them. So assets, there's no problem in the market. There's like an endless list of assets that want to tokenize in every size, from $1 million to $10 billion. There's just a ton of assets that want to tokenize, and I'm seeing them all the time. They're not yet coming in numbers because the investors on the other side, especially the institutional investors, are not in yet. And the reason they're not in yet is that the platforms on offer are not suitable for their fiduciary requirements. It's not safe enough. All the reasons that I said why I created Ownera. So for me, the first stage is to approach and to get the people in the middle. The people in the middle are those intermediaries that we've always been talking about. Now, I'm giving the intermediaries a platform that is extremely efficient. So all the inefficiencies of intermediaries go away. But the intermediaries still play this important role of finding the assets, staking the reputation on the assets, and then distributing the assets. Distribution is one of the biggest problems in digital securities today. So for me, the first stage is those in the middle. So I'm going straight to investment banks. I'm going to exchanges. I'm going to the big asset managers, and I'm starting projects with them. The funny thing is that every one of them that I talk to, the moment that they're going to a POC, they can whip up as many assets as they want, and they can choose one or two that are really, really good. Usually they will take an asset that already exists, they already have investment, already have holders, so they will turn the equity or the debt into tokens, and then you have it tokenized on the platform, and then a trade can start. So we need to kickstart this market, and kickstart this market where assets are abundant and investors are weary. That's what we need to start with. And I know from talking to the investors that they're interested as well. I mean, there's only upside to digital. Everything that you had, an asset that you owned before, which was completely liquid, could be more liquid, not completely liquid, but more, at least tradable. So there's no downside to digitizing. That's why I keep saying in 10 years, everything will be digitized. There's no downside, only upside. But we need to kickstart this market, and it's not happening yet. So that's why I'm starting. That's one of the reasons that we started Ownera.
And I have a question. What, in your opinion, is the place of Ownera in this infrastructure that you have been building? Because, for example, like you have invested in Archax, the digital securities exchange. How they will be connected together? Or is Ownera will take a completely separate place on this market? Maybe it's even a new market that you're trying to create here.
Ownera is a network only. It just has API. It doesn't have any interfaces. So this is where you store all the information. This is where you have APIs that allow you to open new assets, to become a node, to manage transactions, to store KYA and all that. We already have a test networking, but it's only a network. The entire industry of security token, 90% of the industry of security tokens, even more, 95% of the companies of security tokens today are application level companies.
Yeah.
And these application level companies are working really, really hard on top of platforms like Ethereum or private networks like R3 or R3 Corda or and they're working really hard to build things. So one of the things that we've done in Ownera is we've taken many of the features that you have to build on the application layer that are common to all security token platforms, and we put them into the system itself. So you don't need to build a whitelist; it's already in the platform. You don't need to deal with atomic transactions; it's already there. You don't need to deal with regulation even. Regulation is also managed at the Ownera level, so you can just focus on building an application. So for Archax, and obviously they're a portfolio company that I brought into the fund, and very close with them. So for them to connect to Ownera, it's just connecting to the APIs at the bottom, but it's going to be a lot easier for them to connect to that than to connect to the various protocols on other networks. So Ownera does not compete at all with anything that goes on in the application layer of security token space. The opposite. We are going to give them a very simple and easy tool to work with. The only people we do compete with is the networks, the blockchain level. On the one hand, the crypto networks, and on the other hand, the private blockchains that are being sold into the industry.
So one of the like downsides and things that are stopping institutional adoption, stated by some people, is that institutions are not used to dealing with tokens. So, and as long as they don't have their own, software for just holding these tokens, dealing with them, that this thing stops them from diving more into that. How does is it about user interface and making an easy solution for them to deal with tokens instead of traditional form?
It's all about, in my view, again, I'm going back to those trusted intermediaries, those investment banks and exchanges and so on. It's not that a pension fund or another, a big endowment or whatever. It's not that they don't want to hold a digital thing. They're just, they're not comfortable with it yet because none of them has already done it, and nobody wants to be first, and they don't know who to trust. Some of the companies in the space are very new, and these guys usually work with people that have been around for a while. It's all very, very new. My view is that in the end, somebody sitting in a pension fund today, everything is electronic at least. Okay, so even if it's not digital, you look at it in your computer. People are not moving pieces of papers anymore. It's still Excel sheet, and it's very, very ugly. But they take what the banks give them. So in my view, if I called somebody in a pension fund just out of the blue and said, please hold my digital tokens and not give them custodian services, it wouldn't work. But the market is not there already. The market is custodians are being built with custodian services. There are new and great ways to move tokens now in a safe way. There's a company that just launched out of stealth the other day called Fireblocks that is helping move digital assets from one place to the other. So all of this is being built. So technology is already there to the custodians. But the question is who is offering it to the institutional. So I think if you have a situation where a big institutional bank, and without naming any names, think any investment bank that comes to your head, comes to their investors and say, we checked it, we worked on it, we will be your custodian, this is the platform, here's how you do the passwords, or even better, I've connected it to your existing system. Yeah. Where you hold your existing, and you shouldn't care about anything. We're a custodian, don't worry, it's done. Okay, that's what that's what they want to hear. And within 10 minutes of that happening, they will not even know the difference between the technology that holds a digital version or the technology that holds an analog version. But they will know that it's more liquid, and they will know that it's worth more, and then they will want to move all of their assets there. And I think that's the solution. It needs to be completely transparent for these institutions. And when I speak to banks, they are already working on custodians. Some of the projects that I'm seeing are about digital securities, but they're all connected to custody projects. And many of them are also connected to stablecoin projects. So, because you need this for the efficiency as well. So it's an ecosystem that's happening. Just to make it, to help accelerate it, we've made integration of custodian service into Ownera even easier. So you can connect the custodian approval to each transaction. The user can choose their own custodian and can even change custodians down the line on Ownera, which they can't do on other platforms.
And in your opinion, we just recently we made a video with Henry Gebbing from Finot, and we discussed custody because they're a digital asset custody provider. And he mentioned that there are several types of companies competing in this custody battle, so to say. Institutional custody battle, exactly. So these are former exchanges, banks, traditional custodians. Who, in your opinion, is more likely to take this leading place in this competition? Because it really is a big market.
I think there's going to be two types of players. There's going to be the players that come from the crypto world, but have grown up, like perceived to be grown-ups, and especially people from the States that have gone through the trouble of being regulated and doing it properly. People like Coinbase, Gemini, and people like that. And this is one type of solution that I'm seeing in the market. And the other type of solution is I'm seeing the traditional people, even banks themselves, building platforms. And once they build a platform and they launch them, those will be very much accepted by institutions. These are the two types of things that I'm seeing. I think that when it comes to the more public, more retail, they will go more for the custodians of. When I say public, I mean even high net worth individuals and family offices and so on. They will be very comfortable dealing with people like Coinbase. While a pension fund will be, I think, more comfortable dealing with a bank that provides a custody service. 3 years from now, 4 years from now, nobody will care. It will just be commodity.
In one of your presentations, I think I saw slides on your LinkedIn, you compared the evolution that is happening in the security space right now with the music world, from from vinyl to streaming online, to music streaming online. But I think this analogy might be more suitable for a retail space. And one of the big promises, at least stated, of tokenized securities is the accessibility of opportunities for fractional ownership. So, really targeting the retail market. Do you think that I mean, you mentioned that it's still like much smaller market, but do you see these promises, coming into life? Do you see this as a democratizing force for small, for retail investors?
Absolutely, there's no doubt. It's just a question: how do you get there? Do you get there first by going in and putting STOs on all sorts of platforms that are new and go crowdfunding straight to the audience? And we know the size of the crowdfunding market. The size of crowdfunding is not huge; it's small. The reason crowdfunding market is small is that it's not really about money. Crowdfunding, it's very hard for an investor, a small investor, to make money on crowdfunding. It's I mean, in crypto, people made a lot of money because crypto was growing really fast. But when you look at traditional business, crowdfunding market is financially is not the best market in the world. In most cases, when you invest in crowdfunding and you invest in a company, you're stuck with the money and there's no liquidity. And if you look at Kickstarters and Indiegogo and places like that, the things that get funded are the cool things, and people invest in them because they're cool and amazing. And in many cases, they're not even expecting to get the product. And if they get the product, they're happy. It's not a financial story, crowdfunding. And if it is, it's at the hundreds of millions or small billions. In order to get significant numbers and volume of digital securities to the public, we need first to have the pension fund manager comfortable with investing. If the pension manager is comfortable, right, and she signs the approval to do that, okay, then some user will feel safe because these platforms are already tried and tested and used by other people. So I think it will start with the institutional, and then you'll see the $10 billion, the $2 billion, the $400 million things being tokenized and just become standard. That ownership is now digital. It's not analog anymore. And 5 years from now, it will be just understood. And once it's understood, more and more assets will go digital because there are only upsides to being digital compared to non-digital. And then it will flow down to the market in a safe way, in a way that the regulators will also be happy with. Because if the pension fund manager signed it, right, the fiduciary work has been done, the regulatory work has been done, same platform can be trusted by the regulator to offer services to the little person in the street. without fear of being, mugged and the money taken away from them. So it's just a question of, do we get to democracy of assets by starting from the bottom and selling small assets and second, third tier assets to the retail, or does it start by doing it properly, with all protections and doing it once really really well on the top of the pyramid, and then letting it flow down? And I believe the second option is the one. But my long-term goal is obviously, I put a tweet on it, 10 years from now, most assets will be tokenized, will be digital.
All right, I think this is it for today.
Thank you very much.
Thank you very much. Thank you. It was fun. Yeah, it was fun. It was extremely interesting. Yeah, I'm surprised Xenia didn't ask for forecasts. I heard the forecast already. No, because I heard the forecast. No, I'm happy with it. Yeah, you got what you wanted.
Really enjoyed this talk. Thank you very much.
Thank you for being with us at Value Tokenize. If you have any question to Ami, please feel free to leave them in comments. We'll make sure he answers them. And also like and subscribe.